Today, I'm gonna answer how much money you need to buy your first rental property. What's up, guys? My name is Brian Tran. I own over $7 million in rental properties that generate me over $30,000 a month in passive income. And I wanna share with you guys why owning rental properties is one of the best investments you can make. Real estate investing has been one of the greatest things that I've done in my life, and I've done a lot of cool stuff. But owning rental properties has allowed me to provide for my family. It's allowed me to take all the vacations I want, drive the cars I want, and do whatever I want. Honestly, I don't have to work today if I don't want to because I have accumulated enough rental properties to cover all my expenses and some. And it didn't even take that long. Realistically, I've only been investing for the last 9 years and has been able to accumulate enough to kind of chill and relax. Okay, so let's get back to the topic of how much money do you need to buy a rental property? Now look, the simple answer is if you come from a rich family and you got cash, you can buy anything you want. But most of us do not have that much cash, and so we have to get a loan. Loans are good, guys. Loans are not bad. And let me tell you why. Loans allow you to leverage, which is the key component as to why so many people invest in real estate. There are many different loan programs, but I want to go over the 3 today that I think are going to be the best for you in buying your first rental property. And that is your conventional loan, the FHA loan, and the DSCR loan, okay? To briefly go over it, conventional is if you go to Bank of America, Wells Fargo, that's going to be the most traditional, right? 20-year, 30-year fix, easy. The FHA loan is for first-time home buyers only, and this one I like the most because it allows you to only put down 3.5%, whereas the first one may require you to put anywhere from 10 to 20% down. The DSCR loan is great for people who don't have income history because the banks don't really care so much about what you make, but whether the property has the ability to pay back the mortgage or not. So, which one should you use? Now, if you've never bought a property before, and this is gonna be your first property, I highly suggest that you use an FHA loan because you only need as little as 3.5%. So assuming you buy a property that's $200,000, you only need $7,000. And if you think about it, $7,000 may take you a bit of time to save up, but it's a lot better than having to put 20 or 30% down. So getting in is much easier, and I would suggest that this is the route you take if this is your first property. All right, let's say for whatever reason FHA isn't gonna work for you. The next best would be getting a conventional loan. Now, a conventional loan for an investment property, you will need to put anywhere from 20 to 30% down. So if that same property is $200,000, you're gonna need anywhere from $40,000 to $60,000 down payment to buy that house. The pros of going the conventional route, from what I've seen, is that you typically get a better interest rate. You don't have mortgage insurance like you would in an FHA, but the downside is you have to put significantly more down, and they're gonna have to rely on your income. So you're gonna have to provide tax returns, employment verification. It's gonna be a little bit more of a process. But ultimately, guys, it's not that hard. It may take you a little bit more time to save up that down payment, but you can't go wrong with either one. Now, the DSCR is a great program for people who do not have that income verification, right? You don't have 2 years of tax returns. You may not have very strong financials. This is a good loan for you because they don't care about you. They care about how much the property generates each month. DSCR loans typically require 25% down, and the interest rates are going to be higher than the FHA and conventional. So back to the question as to how much money you need to buy your first rental property. It's going to be ranging from 3.5% down payment all the way up to 30% down payment. But you're watching my video, and I want to make sure that you guys are prepared when buying the first rental property. So there are some other expenses that may not be required, but I highly recommend it. The other expenses I want to talk about, aside from the down payment, are your reserves and the property management fee. Typically, when I buy rental properties, I like to set aside 6 months of reserves just so that if anything goes wrong with that property, I'm set. I don't have to scramble for money. It's set aside just for those emergency situations. And that could be something like the vacancy, or let's just say a water heater breaks. I'm covered. You want to have that peace of mind. And the second fee is the property management fee, and that ranges anywhere from 8 to 10%. So make sure that when you're calculating your net profit, you include that expense in, because especially if this is your first one, you don't want to be managing everything yourself. Hire somebody professional, let them deal with the headache, let them go ahead and handle the finding the tenant, managing the tenant, picking up the phone calls, so that you can do what you do best, save up more down payment, and go buy the second property. I know I'm throwing out a lot of numbers and it might scare you, but guys, there are ways to structure these deals to where you actually make money or at worst, break even. Now, the only time I break even on a property is when I'm investing into an appreciating market. So I don't care too much about the cash flow, but I know that in 5 years, 6 years, that property value is gonna double. Sometimes I also invest in markets that don't appreciate as much, but they're making me $500-600 in monthly cash flow every single month. So you have to make sure that you do your homework, you look at the market, you are analyzing the deals, seeing how much rent's being collected, what's your mortgage, and then ultimately finding out what the cash on cash return is on your investment. I don't wanna go too deep into the whole how to find an appreciating market or what's a cash flow market, so I wanna include this video right here. Watch that. I go a little bit more in depth of what a cash flow market is, what an appreciating market is, and kind of like the pros and cons of both. So take a look at that video right there. But in short, guys, buy rental properties. It may not make you rich today, but I promise you, real estate has been tried and true. It doesn't require a massive amount of degree or like some kind of crazy smartness. You can do it. Just buy one, buy another, and I promise you, as long as you just make sure the numbers make sense in the beginning and you're buying them right and you're putting good mortgages in place, you will be set for life. You will not have to rely on a pension, Social Security. That will be your investment, guys. And you buy so many, then you can just chill like me, do what you want, when you want. So I hope you guys got a lot of value out of this video. I appreciate you guys watching. Share this with some friends. Hit the thumbs up, hit the comment section. I'll see you guys on the investor side.